Hello again, welcome back to my videos, my podcast. It is great to see you. And today we are talking about FEGLI, F-E-G-L-I, or federal life insurance, because we know, just like everything else in the government, it is not a simple system, right? It is not simple. There are lots of rules, a lot of complex things. So today we're going to break it down into its parts, and hopefully you can understand it just a little better to help plan for your future and provide for your family the best you can. So the FEGLI program has four basic parts. Four. I put it through fingers, it's four, right? And the first part is called basic life insurance. And this coverage you were automatically enrolled into when you were hired for the federal government. And this coverage provides about your salary, rounded up to the nearest 1,000 plus 2,000 of coverage. So I'm sure that sounded really complicated. Basically, let's say you make $57,000 every year, right? Because that's an even $1,000, it would just be that plus $2,000. So that'd be $59,000 worth of coverage. Now let's say you made $57,500, it would round up to $58,000 plus $2,000. You'd be at $60,000 worth of coverage under this plan. So if you were to pass away, that's the amount of money that your family would get under this basic life insurance coverage. And the government pays a portion of this, and you pay a portion of the premium as well. You have complete control to not enroll in this program. You will be automatically enrolled, but you could deny it if you want. Not a lot of people do, but some people do. And one weird benefit, not weird, but different from the other coverages, is what they call a living benefit. So if someone had this coverage and they became terminally ill, where they were expected to die within 9 months, right? Instead of the coverage, the money, right, being paid out to their family members once they passed away, they would actually be able to apply to get that money sent to them before they pass away to pay for a lot of the medical bills and things like that. So that's called a living benefit, where you don't have to wait till you die necessarily, but you do have to be terminally ill to get this type of coverage. So of course, you do not want to be terminally ill to be able to get the money out now, but it is a nice option for those that find themselves in that situation and really need help to cover a lot of those bills that come along with that sort of situation. So the basic life insurance, the one I just talked about, that's the first type of coverage under the FEGLI program. And that is the only type of coverage that the government helps pay for, right? They pay about 1/3 of the premium, and you pay the 2/3 that's left. But that's the only type of coverage that they help with under this program. So the next type of coverage is called option A. And this is a pretty simple option where it adds another $10,000 worth of coverage to your coverage. So basically, if you were to pass away and you had this coverage as well, you'd get another $10,000 of death benefits if you were to pass away. And again, this is paid completely by the federal employee, and the government does not pitch in to pay for this one. And now for the third part of this plan, it's called option B, and it's additional insurance. So basically, under this plan, you have the option to get coverage of up to 1, 2, 3, 4, or 5 times your annual salary. And that is also computed where it rounds up to the next $1,000. So again, let's use one of the same examples. Let's say you make $57,500 each year. That would be rounded up to $58,000 for this purposes. And then depending on how much you choose to times that by, that's how much coverage you'd have. So 58,000 times 3 if you chose the times by 3 option of this coverage. And of course, the more coverage you get, the more expensive it'll be, but that's how it's broken down and how you could provide coverage for your loved ones, right? And I often get the question, okay, how much do I need? That is really an individual question, and you have to look at what your family would need if something was to happen to you. How many years of your current lifestyle would you need to provide for before they would be able to get other sorts of income, right? Whether that's your spouse working or other things coming in, Social Security, retirement stuff. How much do you need to provide for so they'll be okay if something was to happen to you? And now the last part of this program, this FEGLI plan, is option C, which is basically insurance that you could get on your family's life. So basically this can be covered your spouse or your children. So if they were to pass away, then you would be eligible to get death proceeds from this type of coverage. And this coverage is broken up into increments of $5,000. So you can insure up to $5,000, $10,000, $15,000, $20,000, and $25,000 is how much coverage you could buy for your spouse or your children. And of course, the more coverage you get, the more expensive it is, but those are kind of the options and how it breaks down. Often this kind of coverage covers a lot of, if someone dies, it's expensive. Funerals are expensive, burials are expensive, and so this sort of coverage can cover some of those death expenses that happen. It's not fun to talk about, I know, but that's the kind of coverage that people get to cover some of those things that come up if someone's to pass away. So hopefully this video gives you an idea of what the 4 coverages are and kind of what they do and how they may be able to help you in your financial plans. Some people need a lot of life insurance because they have a lot of dependents, a lot of children, a lot of needs. Some people not so much. So you have to really look at your situation, see what makes sense, and then get the coverage that you need accordingly. And interestingly, for this program, the FEGLI program, when you're a young person and you start your federal career, the rates, the premiums are actually very competitive, they're very cheap, and they're good. As you get older, regardless of what plan you're in, it becomes much more expensive, but especially with FEGLI, you may want to start looking once you get over 50 especially for other plans out in the private side, because sometimes they could be more competitive and more cost efficient that way. So just look, it's worth a look to see what rates they have if insurance is an important part of your financial plan. So again, I hope this is helpful. If you have any questions and comments, please email me, put in the comments below. I will do the best I can to answer them and to get back to you as quickly as possible. But until then, I will see you next week.